As we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone.
Ah.
You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets. Welcome everyone to the Kendall Report. It is Tuesday, and what a day it was. Markets just collapsed. We saw near panic selling at the end of the session in that final hour, especially when it broke through the new lows. So a very interesting day. As you recall, yesterday was expecting a possibility of trading into mid 4500s, but I mentioned something last night, if you recall, as I said, who knows, it will probably be fine as long as something doesn't come out that we're not expecting, such as maybe Fitch coming out with comments about the banks, which they did. They came out, said we might have to downgrade some banks, and that started the selling in the banks. And then, of course, the big story overnight was that China lowered rates. So, and they also didn't report the unemployment numbers, which is kind of interesting. You know, you'd expect our current government to do those kind of things. But so how bad are things? Who knows? Definitely triggered a lot of selling in the markets. One of those relentless days that just continued to move lower with no sign of reprieve throughout the session. There was one little bounce after printing 58. We traded up, I think, almost back to 80, and then the sellers just came back at it again and just continued to move forward. One of the disadvantages, and I could tell you, I wish I could have seen the database last night, because we are at, we're down in the 25% bullish handle yesterday. I can't see it, but I'm expecting that we're going to be in full liquidation mode, meaning that we're penetrating through the, 21%, 22% level, and that typically says we're going down into single digits. If that does occur, then we're going to start to see some liquidation as we come into Friday. I realize it's just Wednesday tomorrow, but if we stay down in these levels, then there's a very strong possibility we're going to start to see some selling into the intermediate models, and maybe it gets more systemic as we go forward. And it's interesting, if you recall, I was expecting that we would get into the third quarter, if you went back and watched videos from earlier this year, that we'd get into the third quarter, and that's about where the market should rally into that level. And that was based off of the quarterly analysis that we would get at least another quarter up, and then as we came into Q3, we would start to see some potential pressure. So I don't think the game's over just yet. There is some support levels that we look at, and I'll probably touch on some of the weekly analysis just to bring in that perspective, because I'm seeing some things starting to happen even on the weekly charts as well. So there's definitely some things going on there. So let's talk about a few more things. I really think, listen, the banking situation, I think, is very, very interesting. And I'm going to give a shout out again to Dr. Jim Baker, because we had a very interesting conversation yesterday about the Fed. And I think maybe I'll bring that into play today. We'll talk about it maybe when we get into the interest rates, because it has everything to do with what's going on as well. One of the other influencers today was that that back end of the curve, the 10 and 30-year markets started to move up. We actually hit fib target 2 on the 10 that seemed somewhat really not reachable, but here we are all of a sudden pushing into close to the 430 level on the 10, and I think it's going to get even more interesting. So once again, I'll save some of this, but I just want to mention, as one of the things that I talked about yesterday, is that we have a lot of these folks are telling us to be buying the back end of the curve, lock in these rates, and I'm not sure it's quite time to lock in. And anybody that bought any of these auctions, these longer dated securities on Treasuries, and any of these auctions are underwater, and it's just getting worse by the day. So I would be very cautious of that. And those of you, if you're an advisor watching and you're 60-40, you're having a really, really bad time with the markets down and the bonds getting hit. So that strategy, in my opinion, has been dead for a decade, but a lot of folks still do that. I always tell folks, if you're an individual and you have somebody that's doing that, that's what their strategy is for your money management. Fire them and run out of there as fast as you can. Anyway, so let's touch on a couple other things in some of my notes here, and let's see if this is probably appropriate time that we can go through this, because one of the things that is starting to happen again, and I don't disagree with Fitch downgrading some of the banks, and that the banks are coming back in to under scrutiny again, and because we still have that mismatch on the books. And I think a lot of these folks got long duration, which is very unusual for banks to do that. And that's been a problem. So, I've been on the record saying there's no banking crisis coming, but that was early in the spring. If we start to see the bond vigilantes come out, we start to see some things that I'll discuss in the technicals on the interest rates tonight, then there could be some more systemic issues start to come into play here, especially in the banking system. And, so we saw a lot of pressure across the board there from that standpoint. So let's just talk about something, and I think that we have some time to discuss this. I'll go through this today. And before I get into this, I should have said this a few minutes ago, but it's possible that I'm going to be late to the normal stream that I do every day, or it might not happen. I have a personal event that I'm unsure of how things are going to come together. I think what it might end up is that I will be maybe a half hour late or so, but I will put that on Twitter. So if you're following me on Twitter, you'll get the information there. I'll put that out there, which I'm a portfolio expert. There's no E in the expert. So portfolio and just with an X. So let's talk a little bit more. And the Fed's balance sheet, we're going to bring in the Fed today and discussed this yesterday, and it's starting to become more and more obvious. And I think the a lot of folks are thinking that the Fed will maybe lower rates because the Chinese did. And I don't think that's going to be the scenario, but I think there is something to look at. And I've mentioned this several times on this channel when I talk about the Fed, talk about the Fed's balance sheet, and that we don't need to see the balance sheet go back to some people are talking about, how much it's increased since 2008. My argument has been that the banking system is, and the entire economy is much bigger. So the Fed needs a much larger size of their balance sheet to support the economy. And we broke down some numbers like the just for checking balances, regular liquidity in the banking system is about 3.2 trillion that the banks have with the Fed. And then you start to look at currency float, you're looking at 2.3 trillion. And all of a sudden, that number puts us at 5.5. And then you're looking at the possibility of the reverse repos, adding some money for additional liquidity. All of a sudden, that's another 1.7 trillion. And all of a sudden, instead of we're down to maybe looking at a somewhere between a 6.5 and a $7 trillion balance sheet. I don't think it drops below there. So here's the potential moment, and I think it's 6 months, maybe as much as a year away from right now, is that the QT program will be the first thing to be halted. And if you notice, nobody talks about QT. There's still, the goal is to, I think it's selling 60 of Treasuries and 30 of mortgage backs. And they're falling short on the mortgage backs. They're pretty much on phase for some of the Treasury securities. But the bullish thing that is likely to happen is going to be that they will announce that QT is done. And I think we're a little ways off from that. But if the Fed starts to discuss that, maybe in September meeting, even if they do raise rates again, then that's going to get, I think, to be the dominant story out there rather than the story of just more dropping rates. So think about that in itself, just no more selling. So there's competition going on right now. You've got the Fed doing QT, and you got the Treasury in need of some longer-term stable cash. And that's why you're seeing the pressure on the back end of the yield curve right now. So I'll probably just mention this. I'm doing this up front tonight. But these are the things that I think you're going to have to watch for. And this may trigger more systemic thoughts, may get some people to take on some more, I guess best way to put it, more protection. And maybe the risk-off trade gets a little more exaggerated than originally looked like it was going to. And if you go back just on this channel in the last couple of weeks, I've been getting more and more cautious and looking for that rotation. I still think that the intermediate charts are going to hold, but we could go to the secondary levels of these trends, which I will touch on tonight. And on Sunday, I will go into more detail. I don't think it's appropriate today. I want to see the end of the week. I would also like to see the run of our models to see what kind of, if we start to get any negative rotation, on the intermediate level. But I think that is going to be really important to watch for as we go forward. So just looking at my notes real quick here is I think that summarizes pretty much, and I'll talk a little bit more when we go through interest rates here in just a few minutes. So yesterday felt pretty drastic. We're down 1.16 on the S&P, down 1.14 on the Nas, Russell down 1.29. So there was definitely some selling, but we're down into that mid 44 handle that I've been talking about. So there might be a bit more. I'll cover that, like I said, in the technicals here. So I think the one thing we did get an STX buy on the action today or on Tuesday. So I'll go through all this stuff. So let's go ahead. We'll cover the database. I wish I had the output of the database tonight so I could really bring in some real perspective. That's one of the downsides of doing the stream every day at this time. But like I said, it just works a lot better for me being able to function in life from that standpoint. I get in the office quite early, so I'm up at 4:30 in the morning and in the office by between 5 and 6 a.m. So anyway, let's go ahead and get into the database, and we'll look at it, and I'll talk a little bit more about the expectations. Those of you that have WaveTech will be able to see this in the next couple hours. So let's go ahead and get into that. So here we go. 25.54% bullish. We have 1,310 sell orders for this morning on the opening, and then we had 123 buys. So big time negative rotation as we came in. I suspect with the selling that we saw today that this thing is going to be below 22%, and what that means is we're likely to go down to anywhere between 12 and 8%. Those are typically the extremes. And if we hit that number, then all of a sudden the timing of the recovery changes as well. Because once you get below this 28% level, that actually, this is what happens. Once you get below a certain percentage long, so there's only right now 3,974 symbols of the stocks that are long right now. And these are mutual funds, ETFs, and individual equity. So there's not a lot left here. And to rebuild these after a decline like this, it gets a bit more difficult to actually do much. And if you recall in yesterday's analysis, we didn't go through the database, but one of the things that I was discussing is that there was plenty of overhead resistance. Even if we rallied, we weren't going to be able to get much above 45.50, which we didn't get a chance to even play that out. And the market did top out around London's opening last night, with just steady selling all night long. I think I saw some messages last night that were coming out that some of this Fitch stuff started to come out pretty early on, well before the opening this morning. So, like I said, as we go through, it's just Tuesday night. We go through Thursday's video. I'll cover more of what I think is likely to happen here, because we still had a slightly negative rotation on the intermediate. You can see here down at the bottom of the screen here where it has negative. That's on the weekly models. So it was slightly negative, nothing material, but it is definitely starting to show some signs of rotating out from that standpoint. So let's go ahead and let's get into the S&P and go through our normal analysis here. All right, so the S&P this is the hourly chart. Looks like we have some potential to challenge around 44.61. We're currently trading at the moment. We're trading at 54, so we could move up into that level. The algos are suggesting once again a rally just beyond that. We're going to see some positive. We probably get into these moving averages and maybe start to peak out around 44.75. These are round numbers. We'll look at the market grid here in just a minute. Like I said, we did get an STX buy signal, so that just suggests a possibility of a sideways trading range. And so, but you can see here the algos are suggesting that that's what the pattern's going to look like. I thought it was interesting. Let's come over here and go to the daily. I was talking about that rounded bubble bottom, and we're getting almost another one. Even though we were down pretty hard on the S&P, we're actually seeing the market grid turn up. And this is interesting, folks, because PPM1 has crossed its first derivative, which typically means that we will challenge the value of this 10-period moving average 44.94. So maybe there's a challenge of 4,500 in here. We saw a bit of a rally. If we look at yesterday's rally here, if we come over here right now, we're looking at, we got up to 45.17, and that happened over right into the London Open. If I brought back the hourly chart, you'd be able to see this here. But 45.17 was a high. We never printed up into that 30 handle. If we look at the market grid for yesterday, R1 was 45.17.63. The high was 45.17.75. So perfect hit on R1. And then we got a rejection out of there. And then the rest, we just continued down as we saw. STX was 44.55.58, and 44.54 was the close, and low was 44.47. So we printed just under STX, and we finished under there. So we should see the possibility, like I said, of 1 to 2 days sideways. But if you look at the algos, at least on PPM1, there looks like we've already crossed to the upside, and we're only down at a minus 0.18. So this is not in trend mode down. I'll show you something here on TradeStation real quick. I haven't brought this up for a while, but we did get a sell signal here at 45.23 on August 4th. There was a model sell signal that came out. So we exited the trade that we had on for all the way. Just trying to find the trade here. Yeah, that we had on for actually all the way back into June. We exited that long trade, and the next day we got short here. So we do have a short bias here from a modeling standpoint. But the way that this, going back to TradingView here, the way that this PPMs are turning up, I suspect this is going to stabilize in here, and we're going to have to get above the 10-period moving average, but that looks like we've got some consolidation. We're probably going to end up going sideways, so that STX buy number is likely to see some sort of consolidation from the standpoint of the next couple of days. The key levels are going to be to watch the STX level today. And like I said, we hit a perfect R1 yesterday and got rejected off of there. Today, I would suspect we've got S1 is 44.44, and the low so far 44.51. Watch that S1 number. If we get through there, 44.34, and you can see the numbers on the far right. S2, 44.33, and then 23 and 14. I think we probably end up printing and holding around this S1 level. And like I said, maybe the news cycle can continue to drive this. I saw a bunch of stories talking about we closed under the 50-day moving average. So the retail guys are screaming about the 50-day moving average. And that's always a sign. I'm not a fan of that average. I use the 40, and the 40 is we've been under the 40. That was what I was talking about going back a couple of weeks ago, that I thought we would hover along that, which we have been. I think we potentially get right back and rebound back toward that number, just based on what PPM1 is doing, and PPM2 is still representing some downside here over the market. And that number here is, let me get some values real quick. So that's 45.41. I thought we could get up there and trade up there. So that's going to be major resistance up there. And then the 40 is 45.05. So yesterday we were able to print just a touch above that at 45.17 R1 rejection. So just know with this thing turning up, we're not seeing like this drastic acceleration where we're going to potentially get panic selling and those type of things doesn't mean that we're still, and we're not quite in a downtrend yet. ppm2 minus 0.14, ppm1 minus 0.18, but it could develop into more. And I'm going to go to the weekly chart here because this is really one of the things I was talking about. We should hold the 10-period moving average, but I also was talking about, if you go back and watch Sunday night's video, I was talking about how the algos are showing that we're starting to break down here across the board and momentum starting to be lost. Now we're still, ppm1 is at plus 0.23, so it's basically in trend mode. ppm2 at 0.49, and we could ultimately, if you look at the market grid for this week, you're looking at, on the downside, 44.58 was S1, so we basically just printed below that 44.31 and 44.06, and then a 3 handle 43.82 is RTX on the weekly. So 43 is a possibility even this week, just looking at normal volatility that we get out of these patterns. My expectation is I would watch this. S2 will probably be the extreme, be 44.31 if we get some follow through. But everything's pointing to, with the STX buy on the daily, everything's pointing to somewhat of a sideways move. Let's go to the Nasdaq here. So the Nasdaq has almost reached the 21, not quite. We do have some fib targets that were embedded in here, and this is a weekly graph again here. So what we're looking at is, let's just take a look at these numbers here. 14,919 is fib target 1. We hit a low of 15,020, so we're very close to that number. And then we're looking at the next two numbers, 14,482, 14,212, and we have the 21-period moving average almost exactly at that 14,482. That number is, let me bring that value up real quick here. That number is 14,468. So that's going to be the extreme, and we still have downward pressure here on the weekly. So we'll go to the daily here, and daily is doing the same thing like with the S&P. ppm1 turning up. ppm1, it is in trend mode, so there's going to be a lot of resistance right at that 10-period moving average right now, which is 15,260. Going to be a tough run to get above there. We also have that pivot that I talked about yesterday. That pivot zone is 14,980. If we bust through that, then Katie barred the door. There's going to be some pretty heavy selling coming in. I think this level will hold. It's been a key support level for a number of days now. And look, we did not get an STX buy signal on the Nasdaq. And oftentimes we get it on the S&P, but we don't get it on the daily. So yeah, you guys are making me bullish. Market crash is inevitable. Stop it. But this is the case here. If we go out, and I'll do it, it's getting closer. We're midpoint of the month, and I'm telling you, the longer term monthly charts, there's no crash coming. Not that we can't go down more, there's just no crash. And I don't see that happening at the moment. But we should, if you look here at the algos here on the daily, the Nasdaq's going to be improving as we come into, looks like we're going to be improving coming into that second week of September in a couple of weeks. So just look for some stabilization here. And the weekly charts, that 21, that value I just put on the 21 will be the case. So let's just move on. Let's look at the Russell. All right, I'm going to use the Russell cash because I think that that will be a little better. We get the algos to work on everything. And so you can see this decline. I was talking about this last night. We went through that. The pivot was at the, you just bring this number up, 1937. So we got through that. Now we're moving down toward some much bigger numbers. We're in the 18 handle here, 1895. And we could ultimately get down to this. This is daily, down to this 40-period moving average, which is pushing us way down to the 1840 level. So this is looking pretty ugly again. And I talked about this the other day, is that the pairs looks like the Russell's going to massively underperform again. And once again, it's primarily to the regional banks. Let's go ahead and take a quick glance at the weekly. There is some support levels starting to come into play, but as with the other indexes, all the momentum is bleeding out. So the most that you can hope for here is some stability. We could start to get down to some of these lower numbers down in a 17 handle. I don't think that's the case, but if you look, and I've talked about this not for a while, but if you look at the zigzag, we just got right up to the top again. Now we're coming back into the same pattern that we've been in, going all the way back. I guess you could go all the way back to June of last year. So for the last year, we just continue to get up around these peaks and come back into the pattern. We do have some decent moving averages here, but nothing. PPM2 is at a 0.41, and that value right now for that average is 1844. So that's probably about the extreme, at least for the moment, with that type of momentum, still an angle of attack there. All right, so let's go into the Treasuries. I covered quite a bit in the opening comments as far as the Fed. And, like I said, there's competition going on with the Fed doing QT, which nobody talks about, it seems. I don't hear much about it. But also with the Treasury raising money on that long end of the curve. And I'm going to change the scaling a little bit. It seems just going back, if we go all the way back to when these back in May, it seems somewhat, if you look at where prices were then, we were at 3.29, and everybody, I remember somebody on the channel was going, it's going down into 250 or something. And I'm like, no, we got fib targets here on the upside. And right now the targets back in those days, high target one was, let me just get this up, 401, 429, and then 447. I mentioned these numbers last night. So we printed 427.4 so far this week. And it's possible that we got some more. And you can see I've been talking about that angle of attack on the 10-year. I went through analysis looking at the 30 as well. Let's see here. I think let's just bring up the 30-year. They were up, the 10-year and the 30 were up about the same, but look at this angle of attack on this 30. The very back end of the curve looks like it's really going to get jacked. And most, we're looking at potentially 475, something like that on the 30-year, and maybe that number I just mentioned on the Fibonacci on the 10. That's a very likely number there in the 440 range, 450, and then the very back end of the curve at the 30-year, the long bond is potentially got to go up to the 480 plus. I would say 475 plus. Who knows? We might see a 5 handle out of that. That seems fairly ridiculous. I haven't looked at this, but I'm going to put it out here. Yeah, this is. I haven't looked at this for a while, but it's interesting because we look at the pattern that's coming in. Back in April, there were fib targets at 347, 416, and 459. And so we haven't quite hit the 459. We're trading at the top end of the grid right now for the month of August. And next month, it looks like we still have that upward channel going. So the higher end of that channel is up in that 450, 460 range I was talking about. This is a monthly long-term chart here. So we're really looking at this thing continuing to move up into this. This is a dragon head formation, so it's likely that we're going to take out these highs, which we actually did, I believe, this month. Let's see, the old high was 4.423. We printed 4.38, so we haven't quite taken it out. We're very close. And then we have that fib target on the upside that I just mentioned up in the 460 handle. So just know that we're going to get that going. And I will cover the Dow. I'll do the Dow next. I think that's very relevant. Let's just stay with the long-term chart here, the 30-year, the monthly. And what we're looking at is we do have some resistance, but the PPMs are trying to turn up here a little bit. But there's plenty of resistance right at where we are right now in the Dow. I was talking about this 103 level a while back. And I think what we're likely to see, if you look at there's fib targets right now for 109 and crazy. This was already met previously, because if we go back, I remember covering this back in 21 when these numbers came out. So in May of 21, there was projections, fib targets off of our WaveTech Fibonacci tool that was projecting out 103, 94, 109, 57, and 113.05. And we look at the high here, we got the 113.94. So we actually exceeded that. And I remember that seeming like a crazy number. And I love the participation. There's always somebody's telling me, no, the Dow going to zero. It hasn't. And we did peak out there in 22, but now it looks like this flag that's building here will probably hover around these moving averages. Let's come back down to more intermediate. I discussed this the other day. We're still looking at, there's 3 fib targets on the weekly right now. Target 1 was 99.6. That's actually been hit. And then we got 97, target 2, 97.65, and then 90. I'm looking at the low targets. Let me try that again. 103.48, 104.98, and 105.90 is it, these targets here. It looks like we should be constrained, but we're still kind of flattish here on the momentum. So, but it does look like the algos are suggesting stability. We're probably going to end up staying above these moving averages, at least support around 101. Okay, so we'll go to the crude oil next. So this is weekly crude. Talking about we're still getting starting to top out in here. We did hit the Fibonacci target here, 85.28. We printed up to 84.89. So we're finally starting to tail off here a little bit. There's still some upward slope, even though the momentum's being lost a little bit. We're at 1.27 bullish on the angle of attack, and that number right now is coming in way down at 76.50, and I'm just trying to come up in the next couple of weeks. That'll be around the where we are now, the 80 handle, 79. We probably should start to bottom. We look at next week market grid here. There's a potential S1's 80, S2 78, S3 77, 80. So there's some potential for that to come back in for crude oil. Looking at the short-term daily, we're seeing some negative flow probably coming back into 77 again, 76, and really just trading in this range. Let me change the scaling a little bit so it looks, there you go. You can see a little better. You have this upward slope here on the PPM1 is still at a 0.31 angle of attack. So we should hold in here and maybe see the market grid start to move up. Boy, Peter Schiff can't be happy about this. We're all the way down. We got to gold got hit with the higher rates, 1927. We're right on that pivot, and we're trying to get through there. That number is 1933. So if we bust through there on a closing basis, then we're probably coming down to around 1907, maybe retesting that level. I want to bring up the weekly because the big numbers here it is. Here is that 40-week moving average, which would be similar to the 200 on the daily. Then we're looking at that extreme right now. We've got some really the fib targets I don't think are in play here, but fib target 1 is 1921. It's right at where we're trading right now. So we look for that to hold along that 40 period moving average of 40 right now is down a ways here. Let me just get that number, 1919. So we're right there right now. And I still think we'll see some stability along that upward slope. All right, so final market we'll cover tonight is Bitcoin, and we're seeing that continuation of that pattern I've been talking about. It does look like there's some potential weakness coming in. We do have downward, this is weekly we're looking at. We do have some downward projections toward the 40 period moving average, and that is right now pushing us down. Let's just get a good value here. Down to 24.9. I still think the 25.5 is a critical area, and the weekly looks like we're going to get some more potential downward pressure into this range. I don't know if that's bleed over from maybe a sell-off in equities, if there's any kind of correlation, or risk off gets a little bigger here. But as I said in the equity analysis, we should be able to see this pattern really stay in the sideways range and be stable. It's the same thing with the equities too on the intermediate level. So you guys tell me you're not seeing any screen because I'm showing a screen here. Let me know if you see a different on this screen, if you see anything. I mean, it's showing on this. Huh, that's very interesting. Okay. Yeah, I use Streamlabs, and Streamlabs showing me an image that it's live. Okay, that is funny. But anyway, yeah, so this pattern is just likely to continue. I think I'll make that a little bit bigger for right now so you can get there. Did you see the gold or anything else? When did the lights go out? Just on Bitcoin? So anyway, yeah, I've got to make a point to track the track the chat a little bit closer. Yeah, that's really strange because I've got all this stuff set. Don't know why it wasn't. I'm going to go back to the previous screen for fun and let me know if you see this screen. Oh, this should be, it should have had some wipes going across, and then let me know. So anyway, yeah. Yeah, let me know if the lights went out again. So for tomorrow, I'll make sure that it's fixed. Huh, very interesting. Yeah, but you can see it now. Okay, that's the same page I had gold up. That's very, very interesting. Alrighty then. Okay, folks. All right, so I'm back on screen. Hopefully you see me now. Thanks for watching. I have no idea. I did figure out a couple things because I've been having sound issues, all kinds of stuff, and it was a Windows 11 update that was stuck in the system, and I got an evil screen of blue death on my Windows. I've only seen the evil screen if you go way back into old Windows days and Windows 11. I've never seen the evil screen of death on Windows 10, and the machine behind me is a Windows 10. It's brand new, but I put Windows 10 Pro on there because I didn't want anything to do with this Windows 11 here. Absolutely hate it. So tough to go. So can you see me now? Yeah, exactly. Anyway, folks, thank you so much. Like I said, if you're watching earlier, just remind you, I could be late or even non-existent tomorrow. I mean, there's some potential, and I'm going to put it about 30% that I not available at all. It should be, and if I am available, it's probably going to be about 30 minutes late. So mark your calendars. I'll remind you on Twitter. Follow me on Twitter. I'm at Portfolio Expert. There's no E in the expert. So Portfolio, just X, and then PERT. So anyway, folks, thanks for watching as always. Pretty exciting. Love the volatility. Today was a very interesting day for trading. There was just was a lot of one-sided trading. There weren't a lot of counter trades, and I tend to be a counter trader, a counter trend trader, so that never happened. Anyway, folks, have a great day trading tomorrow. Watch for that S1 support level. Watch that really close, and hopefully we'll see maybe a little mini bounce, but it looks like we're not going to get anywhere. Probably, if we get lucky, we'll get up to maybe R1, R2. We did get that STX buy signal. So good luck tomorrow. Have a good day trading. Hopefully this stream sets you up well. Hit the like button, subscribe, tell your friends. Appreciate it. Talk to you tomorrow.